Thanks, Greg. Appreciate it. I like the countdown too. It allows me to be exactly ready. So, hello, everybody. Hope you're doing well. My name is Jeff Gibby. You should be able to hear me. You should be able to see me. You should be able to see the screen. Say hello if you can. One thing is, if you're watching on YouTube today, make sure to hit like and subscribe. We appreciate it. It helps a great deal. And there you go. So for today's webinar, there's a few things that I just want to talk a little bit about, and we're going to get into that. But one of the things that I'd like to just say is, hey, thanks for coming. I hope you enjoy the class. My goal today is to have it be very educational. If you're familiar with Metastock, you can use just about everything I'm going to try and teach you today in the software with the Ichimoku indicator and the free scan. But my goal here today is to kind of give you something that you can use as long as you have access to the Ichimoku. Hopefully you'll be able to use it with or without Metastock. Obviously, the scanning stuff that I'm going to show and the add-on stuff that I'm going to show at the very end is very, very particular to Metastock. But my goal today is to kind of give you enough information that you can go away and learn something. So hopefully that's true. A quick question for you guys, everybody. If you do have questions as we go, though, feel free to chat them in, type them in. Every time I look over in this direction, I'm looking to see if you've said anything. Rao, thanks for coming. It's good to see you. Vincenzo, thanks for coming. It's good to see you. What I want you to do right now is, if you're familiar with Ichimoku, Kinko, Hui, let me know by putting a Y in the chat. If you're not familiar with it, put an N in the chat. And then that way I kind of get a feel for what level I'm talking to. This is designed to be a 101 class. So what I want to do here today is kind of give you a good overview of the Ichimoku Kinko Hui indicator. So I'm Jeff Gibby. I don't have normally, I've been here working at Metastock for 27 years. It's a great job. I very much enjoy it. If you're not familiar with Metastock, Metastock's a software program that we've been creating since the 80s. It's been rated #1 in its price category for over 30 years. And that's all we're really going to kind of focus on Metastock. But if you're interested in finding out more about why we've been rated so highly for so many years, reach out. You can come to metastock.com. You can chat with us. You can give us a phone call. So we have Jeff saying yes, Mark's yes, Rich no, Gerald no, a yes from Rao, and a yes from David, and a yes from Metastock. So, okay. All right. So today, again, my goal here, I want you to walk away with something. If you're not familiar with Ichimoku, maybe you will, but in any case. Before we get started, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. One other thing before we actually kind of officially get started, I am going to be kind of talking about a specific scan that is available as a download. I wrote it specifically for today's class, and if you're using Metastock 18 or higher, you can use it. What I'm going to have is there's going to be a link right here. I'm going to go ahead and put this in the chat. I'm going to ask Greg to put it in the YouTube chat for me. You can come up here and you can grab this exploration anytime you want to, but it's a scan. And I'm going to show you how to run it in just a little bit. If you're watching us in the future on YouTube, if you click on the YouTube description for the video, this link will also be here. And what you're just going to grab is this Kumo file. It's for the scan I'm going to show you how to run. While you're up here on this particular link, you might want to take a look at some stuff because there's some really cool stuff. There's a commitment of traders. There's a broad market stuff. There's sector stat. There's some Elliott wave stuff. There's Jake Bernstein's XC up here. There's a lot of really cool stuff that you can grab up there. So anyway, that link's up there. I'll reference that again in the future. Okay. So the gentleman on the screen is actually a guy by the name of Ichimoku Sanjin. His given name was Goicho, Hasada. And he was also known as Ichimoku Sanjin. He's the creator of the Ichimoku Kinko Hui chart. It's like a collection of indicators. The Ichimoku indicators The kind of the backstory on him is he created these indicators in the 1930s. And then he kind of worked on them, developed them for about 30 years, used them. I'm going to go ahead and mute that. But then he released them in actually the late 60s. I believe it was 1969. So if you're curious in terms of what Ichimoku Kinko Hui means, Greg just kind of gave me some education on it. Ichimoku means at a glance. Kinko means equilibrium. And Hui just means chart. So if you're looking at Ichimoku Kinko Hui, the meaning behind the word is, is at a glance, equilibrium chart. So, let's go ahead and kind of jump into it, and that kind of talk a lot about how we're doing. So this is a chart of the meta. It's poorly centered, but I got one open here. And what you're going to notice here is there are a lot of indicators that are kind of fed into it. So if I'm in the, what I want to do, because I want to get back into here, there's actually quite a number of charts, indicators that actually plot when you apply the Ichimoku Kinko Hui indicators. And so we're going to kind of go through all of them. We're going to kind of talk about what they are, how they're calculated, how you use them, and kind of the main signals that you can use Ichimoku for. So let's go ahead and kind of get started. The indicators that we're going to cover today are the Tenkan-san, the Kijun-san, and that's where we're going to start. The rest of them we'll read as we go. So the Tenkan-san and the Kijun-san are right here. So they're the indicators. By default in Metastock, when you apply them, the purple one is going to be the Tenkan-san. It applies over price. And if you wanted to calculate it, you take the highest bar for the last 9 days, the lowest low point of the last 9 days. You'd add those together and you divide them by 2, and that would give you this purple line. Okay. If we're looking at the Kijun-sen, what we're going to do is same calculation, except you're going to look for the highest bar in the last 26 days, the lowest bar in the last 26 days. You're going to add those together and divide them by 2, and then you're going to get your Tenkan-sen, the purple line, and the Kijun-sen, which is the red line. Okay. Now I've got actually this loaded. We're going to kind of talk about this on the chart, but there's some ways that you can start to read the Tenkan-sen and the Kijun-sen. So right here, I've got a chart of Meta platform. I've hidden all except for the Tenkan-sen and the Kijun-sen, and right here you can kind of see them on a chart. And what I'm going to do is I'm actually going to double click on this. With Metastock, it's really easy to kind of manipulate them, but I want you to be able to see them a little bit better. And so I'm going to come in here and I'm going to make the weight on them a little bit thicker for both of those, just so you can kind of see them a little bit more pronounced on the chart. Better, yeah. So there's a couple of different ways you can read this. If the Tenkan-sen is trading up above the Kijun-sen, and I just got a chart of Meta, not Metastock, but Meta, the Facebook. And there's a couple different ways you can read Tenkan-sen. In general, if your Tenkan-sen is above your Kijun-sen, then you're going to be in a bullish phase. And one of the classic buy signals that they use in Ichimoku is if the Tenkan-sen crosses up above the Kijun-sen, that's going to be a buy signal. So if we're looking at the Facebook chart, I'm just going to kind of drill in here. If we look for it right here, and we're just looking at the Kijun-sen is the red one, the Tenkan-sen is the purple one. Right here, you consider it in a bit of a bearish phase because you're trading below, your Tenkan-sen is below the Kijun-sen. When it goes up above, as it does right here, and right here, then it's going to be more in a bearish phase. But where those crosses actually happen is a classic Ichimoku signal. It's a TK cross. And so right here, if we're looking at just kind of the chart, right here we had one of those TK crosses. Here, and that would be when the TK goes up above, that would be a classic buy signal. Where it happened here, this would be a classic sell signal. Here would be a buy signal. So you can kind of see where those actually happen on the chart. Okay. If we kind of zoom out a little bit, as long as our Tenkan-sen is kind of consistently above the Kijun-sen, you're going to be in a bullish phase. And that's kind of something that you can look at to kind of give you a thing. And you'll notice for the most part, we did have a couple crosses that happened. Maybe right here there was a cross. But for the most part, during this whole rise up that Meta has had, it's had a great rise up this year. your Tenkan-sen has been above your Kijun-sen, okay? Until right here, which just happened maybe like, okay, what day was this? This happened back in August. You had your cross down below, and then that would have been a signal that you should get out of your long position or that things are starting to get a little bit more bearish. Jeff says, I'm getting a bad link let me make sure I've got the whole link in there. I just clicked on the link that's in there, and it is taking me to, yes.
So there is something going on, maybe with our entire website. I don't know what the issue is, but I'll try to continue to sort through it and then post the correct link. I'm also having a problem even after I navigated to that link to pull it up. So you just forget the man behind the curtain and continue on with your presentation, but I just want to let people know I'm working on getting the link for them, and as soon as I do, I'll let you know.
Okay. Yeah, for me, it just navigated there. So
does it still navigate there for you?
Yeah, like if I just click on it from the chat, this is the same link I put in the chat at 10:11 a.m. It goes directly to the
Well, so somebody besides me, though, said they're having an issue, right?
Yeah, Jeff in GoToWebinar said they were having an issue. So
I'm having an issue getting to Metastock at all right now. So it might be something on my end. But anyway,
yeah.
Please continue.
Okay, try it again. Well, there might be an issue, Jeff. Give it another go in just a few minutes, and they'll probably have it sorted out. They did just barely put this here too, so maybe that's a little bit in flux still. I don't know, but it should. That is the link. You'll just save it. Try it again at the end and see if it works. So, thank you for the note too. All right, cool. Okay. All right. So let's kind of go back to where we're at, just to kind of recap what the Tenkan-sen and the Kijun-sen, the ways to read that is. If your Tenkan-sen's above your Kijun-sen, that's a bullish indication. If it's below, it's a bearish. And crosses is considered one of the entry types. So, and we'll talk. So if you're looking for an opportunity to buy or an opportunity to short, the early signal is usually the TK cross. The Tenkan-sen cross and above the Kijun-sen would be a bullish cross. And that's one way you could consider to buy it. So, and then this is just the same chart I just showed you. Okay. Oh, wait, no, this is a new chart. So this one is going to talk a little bit about the cloud, or the Kumo. Kumo is cloud in Japanese. So don't call it the Kumo Cloud, because you're just saying cloud. Just call it the Kumo, and that's good. And I'll try not to call it the Kumo Cloud either. But the Kumo is right here. It's the fielding area between the indicator that's called the Senku span A and the Senko span B. So the Senku span A, basically, if we wanted to calculate the Senku span A, we're going to take the Tenkan-sen and the Kijun-sen that we just talked about. We're going to combine the value. We're going to divide that by 2, and then we're going to move it forward in a horizontal shift 26 bars. So that's why this particular indicator plots 26 bars into the future, is because it's actually designed to go 26 bars into the future. So that's our Senku span A. It's the Tenkan-sen plus the Kijun-sen. It's divided by 2 and shifted vertically 26 bars. Horizontally 26 bars. Okay. For the Senku span B, that's this bottom area here. It can be above or below. If it's above, the cloud is going to be red. If it's below, the cloud is going to be green. Okay. But if I wanted to tell you how to calculate the Senku span B, what I'm going to do is I'm going to take the highest high in the price data for 52 days, which would probably be right there. I'd also take the lowest low, which would probably be over here somewhere, for 52 days. I'd combine those two values, divide them by 2, move the whole thing 26 bars into the future. Okay. And that is what's going to provide our Senku span A and our Senku span B. Okay. In the case where the cloud's red, your Senku span B is going to be here, and your Senku span A is going to be here. Okay. Where it crosses is called a Kumo twist. I'll talk a little bit more about that in the future in just a minute. And then your Kumo is just the area in between. Okay. Mark wants to know if the Tenkan, if the price is, does it mean more if the price is above the Tenkan-sen? It does. Okay, that's a really good question, and I'm not going to promote myself as an expert in Ichimoku by any stretch. That's why it's a 101 class. Generally, though, there is a price relationship that we're going to talk about with price in relationship to the Kumo. The materials that I reviewed in preparing and kind of getting ready for today's class didn't talk about relationship between Tenkan-sen and price, just between the relationship between Tenkan-sen and Kijun-sen. Now, if you're up above it, that generally means that prices are moving up, but it's not anything that is being measured or anything that I'm aware of significance. Now, the price relationship, I'm actually going to send this whole question to the chat, Mark, but the price relationship between Cloud and Kumo, or I mean the Kumo and price, is very, very important. And so we'll talk more about that. But the Kumo, when you're looking at the Ichimoku indicator, you can use the Kumo for a lot of ways. And I've listed them all here. So let's go back into the PowerPoint. Oh, we were in the PowerPoint. Here are the different ways you can use Kumo. You can use it as a trend bias. You can look at it as the price and its relationship to Kumo. The Kumo acts as support and resistance. We'll talk a little bit more about that. Kumo will give us we want to pay attention to the direction of the Kumo. Is it pointing up? Is it sideways, or is it pointing down, both now and into the future? Okay. And then also the Kumo twist is your Senko span A above your Senko span B. When it twists, it'll go from a bullish to a bearish phase. So let's kind of go through these one at a time in Metastock and kind of just show you kind of how you can read these. Okay. So let me go ahead and kind of go back into the Metastock. I'm going to go ahead and double click on these indicators and turn back on Senko span A and Senko span B. And so I'm just going to kind of double click in here. I'm going to make it visible. We'll go ahead and apply this to the chart. Okay. And that'll give us both our Senko span A, our Senko span B, the shaded area in between. And of course you have kind of the area that's plotted into the future. Now, there's several things that we want to pay attention to the relationship between Senko span A, B, its relative location to that and price. So the first thing that I said is you can use it as a trend bias. And the way that you read that, Mark, is actually go straight into the question. If we are above the Kumo when we're trading, we would consider it to be bullish. We would read that as a bullish trend. So if we're looking at this right here in Meta, okay, and what I'm going to do is I'm just going to kind of go here. Right here, it went from being within the cloud to being above the cloud. There's a cross that happened right here on the chart, okay? And I'll circle that again, okay? As long as our price is above the Kumo, the Ichimoku is going to be in a bullish phase, okay? When it's trading inside the Kumo, as you can see with Meta, Meta had this really nice run up that went up all the way into just about July. Actually, August. And about August, it started to peter off. We're at the very end of August right now, but it's petered off. And right here, it crossed into the cloud, okay? And so I'm going to go ahead and delineate exactly what I'm talking about by putting a little bit of a circle on the chart. Here, it crossed into the cloud, okay? From here, that whole period of time where price was above the Kumo, you could say that you were in a bullish phase based on the Ichimoku Cloud, okay? As soon as it entered into the Ichimoku Cloud, right here, you would say that it entered into a neutral phase. And the same is true. So if I come back, obviously, before this fantastic rise that Facebook had, there was a fantastic fall, right? So if we look at here, this whole period of time leading into kind of this nice rise up was time where Facebook was struggling to find a support area. And right here, you'll notice that this whole period where we have these closes where Ichimoku is closing below its cloud, or the price is closing below the Kumo, then you're going to be in a bearish phase. So I'm going to go ahead and zoom in. And this is the reason I want to talk about this on Facebook, because it's a great example of how to read it. This whole period while the price is going up, prices were maintaining above the Kumo. That just means that it's bullish the whole time. So, and then as soon as it enters right back here into September, it entered into a neutral phase. Okay, so that's how you can kind of use Ichimoku as a trend bias. Right now, if I'm looking at Facebook, I'd say based on the Kumo, right now we're in a neutral phase. And until it closes up above the cloud, we're going to be in that neutral phase. Or if it closes down below the cloud, then we'd enter a bearish phase. Okay. So that's how you kind of determine a trend bias. And when it exits the cloud, that's actually a very, very popular sell buy signal. So right here where it crossed up above the signal, that's an entry signal that you could actually exercise. In fact, it's a very, very popular one. People love to trade when it comes out above the cloud. And in this case, it's certainly a good example, but this would be a classic buy signal when it comes up above this cloud. Now, with Facebook, I'm going to anticipate that one of two things is going to happen. It's not going to stay in the cloud forever. I mean, I guess hypothetically, maybe it could, but at some point, it's either going to close above this cloud or below that cloud. And when either of those happen, when it goes out of the neutral phase, it'll be a bullish trigger if it closes up above the cloud, or a bearish trigger if it closes down below the cloud. Okay. Jeff says, I see a Kumo twist on the right too. Yeah, and you can see when the Kumo is going to come out, when it twists, when it goes from green to red, you're going to have that Kumo twist, which is also important. It signifies that you might be entering more of a bearish phase for Meta. So there you go. Okay, so trend bias, price relationship to Kumo. The other thing is Kumo will act as support and resistance. So right here, you'll notice, I'm going to kind of zoom in a little bit here. But if you notice right here, oops, as I zoom out, let me go zoom in. Oh, gosh. Okay. All right, here we go. You'll notice right here as it's kind of entered into the Kumo Cloud, it's actually found some support at the bottom of this cloud. It hasn't been able to breach that. And generally, a lot of Ichimoku use this as a support and resistance area, which is why they're waiting to see if this area holds to get an entry position, or if it fails, to get an entry position. Okay. If we come back in time to, I'm just going to scroll back a little bit. Here it was in the cloud for a long time. Okay. So the Ichimoku entered the cloud right here. It entered a very long neutral phase. And when it actually exited that cloud, again, that's a long trigger. That would have been a very good idea to start to consider going long. So Kumo uses, trend bias, relationship of Kumo to the price, and then support and resistance, and then Kumo direction. So Kumo direction, if we've got a nice direction where it's kind of significantly moving up over time, that signifies that we're in a good, nice, solid trend, okay? If we're looking at the future Kumo direction right here, what I'm seeing is not a great trend, right? This is pretty sideways, right? So if we're looking at kind of where this Kumo is sitting, I'd say that it's kind of sitting sideways, which would be a neutral orientation. If I'm looking at a Kumo that's kind of heading down, I'm expecting more of a downward movement. So right now, if we're looking at future Kumo direction, I'd say it's more neutral than anything, okay? If I'm looking at the Kumo direction to current, like if I'm looking at here, we have a bullish, but I see that Kumo is starting to flatten. We're starting to get a flattening off of where the Kumo is. So you want to pay attention to the Kumo direction, both where it is right now, I'm pointing like you can see, and where it is in the future. So actually, I just realized, okay, there you go. Okay, all right, and then Kumo twist. If your Senko span A crosses up above the Senko span B, as it does right here, and as Jeff said right here in the future, it's going to in about 24 bars, I'm going to guess. That's considered a Kumo twist, and it's a signification. It signifies maybe a change of direction. So there's a lot of different ways you can read it. If we're looking at different ways we can look at Kumo, trend bias, you've got the price relationship to Kumo, the Kumo axis support and resistance. There's a current direction of the Kumo, the future direction. Those are things that you all want to pay attention. And you also want to pay attention to whether the Kumo is going to twist now or in the future. Okay. Now, I want to take a little bit of a break and kind of get off of this topic in terms of kind of talking about, we're going to come back into the Ichimoku. But the scan that I kind of wrote for this has to do with the Kumo. So I figured this would be a good time to kind of change gears a little bit and show you how to use it. So hopefully you can get the free exploration if you just click on the link in the chat. You can kind of go up to the webpage, you can download that Ichimoku scan, but I'm going to show you how it's looking. What this is going to be looking for is either a bullish Kumo twist or bearish Kumo twist on the current bar. So not in the future, not in the past, but today. but it's also going to be looking for a close above the cloud or below the cloud, from within the cloud. So it's not going to look to see if it was below the cloud and then went all the way to above the cloud. It's just going to verify that it was within the cloud and it crossed up above, or it was within the cloud and it crossed down below. So to put that into exactly visual terms right now, if Meta platform closes up above the cloud, it would show up in the scan because it's been within the cloud. Okay. If it closes down below the cloud, it'll also show up in the scan. So let me show you how the scan works. This is, again, just for free. And this is the most popular. The reason I wanted to give this to you for free is this is the most, in my experience, it's the most popular Ichimoku setup, is this cross up above the cloud or cross down below the cloud. So I wanted to give you something you could use in Metastock. And this is just something, as long as you download it, you can just use it. So right here, I've got the Ichimoku, or I've got the scan tab active, the exploration tab active. And what I'm going to do is I'm going to just go to my scan. I call it the Ichimoku Kumo Cross. Okay, and you'll have this as soon as you download that installation package. And if you hover over it, there's a little bit of a kind of an explanation in terms of what the scan is going to find for you. Column A is the bullish Kumo cross. Column B is the bearish Kumo cross. C is if it crosses above and down below. Okay. It will filter out if it doesn't match any of those 4 conditions on the current bar. It'll filter it out, and there you go. Let me go ahead and run it. Okay, so what I've got is I've got this selected. I've gone in and I've selected the Dow Industrial. I've selected the Nasdaq, and I've selected the S&P 500. I'm just going to go ahead and run that scan. It shouldn't take a lot of time. And while it actually runs, I'm going to check for questions.
Jeff, I have a question. I have a statement. So yeah, we just checked with web development. There is some kind of issue with that link. So don't go to the link that you've shared. In fact, you might want to just erase it from the chat while you've got it other 4 times. I don't know. Tell people not to go there right now, because it will disrupt their navigation to Metastock. There's something going on. Our web dev team is looking at it right now, but we'll certainly share it with people after the fact if they can't get to it right now. But don't click on the link that we've shared just yet.
Yeah. Now, if you're watching this video in the future, we've probably resolved that issue.
Yeah, in the future. But you're doing great, Jeff. You're doing great. Hang in there and break a leg.
Yeah, no worries. Also, just so you know that, like, instead of saving it, if you wait until after the event, if you're watching and go to webinar and you registered, I made sure to include that link in the email that goes with the recording. So you'll get it in an hour or 2. So, okay. All right, so the scan is done. Thank you for that, Greg. If there's anything else you need to type in, just type in. Here is kind of out of the 500 stocks, 28 of those met any of those parameters. So right here, we've got the bullish Kumo Cloud twist. Here you've got the bearish twist. Okay. Here's a cross up and cross down. Okay. So if I wanted to find so far any stocks that had crossed up above the cloud from being within the cloud, this is the column that I look at. What I'm going to do right now is I'm going to go ahead and sort based on that, and that'll bring up all of the stocks that have crossed up above the cloud so far today, because I scanned it on real-time data. And that would include Bath & Body Works, CarMax, this River Labs. You get the idea. All of these, actually, there's a huge amount of them that have so far today their scan. So let's go ahead and take a look at Fastenal. Okay, I'll go ahead and open up the chart. This is kind of the way you can set it up as well. This is just a clean chart. And if you wanted to see the Ichimoku, take it out of this indicator quick list here, just plot it on the chart. What I wanted to do is just provide something that you could use inside of Metastock. And so right here, as of right now, Ichimoku has gone, or Fastenal was in the cloud, and now it's crossing up above the cloud right now. So that's really it. Very, very simple scan, very, very easy to run. Just send it through. It'll find breaks up above the cloud, breaks above the cloud, and any of these Kumo twists that you're seeing. So there you go. Okay, so I figured that was a good time to kind of break out and kind of show that how to run that scan. But those are the conditions that it's looking for, and that's how you run it. So there you go. Let's go back into kind of talking about Ichimoku method, though. So I'm going to go ahead and go next. We'll talk a little bit about those 2 more indicators that get plotted when you look at the Chiku span. Well, when you look at Ichimoku, that's the Chiku span and the closing price. Okay, so right here in red, the default for Metastock is red. It's going to actually just identify where the closing price is. That's just today's closing price. And then the Chiku span, all it is it's today's closing prices, but it's horizontally shifted 26 bars back into the past. Okay, and so if I actually I'm going to go back into Meta, and I'm actually going to just turn on those last two indicators. So I'm going to go ahead and click here. I'm going to go to color style. We'll go ahead and turn on the close line. And again, that's just today's close. And we'll also turn on the Chiku span. And now we'll have all of the indicators there. Okay. I'm going to go ahead and make the Chiku span a little bit darker, just so you can see it a little bit better. So let me go ahead and change the weight setting on that. We'll go ahead and click on apply. Yeah, that looks pretty good. And then the closing price, I can make that a little thicker too. Because the closing price is the closing price and the Chiku span is 26 days ago, or 26 days, the closing price, they're always going to match. So if you look at the close here, the last value that was plotted for the close is actually the Chiku span, which is a 26 price. Okay. Now, the way that we actually look at the Chiku span according to the Ichimoku method is you want to look at it as a relationship to Kumo and a relationship to price. I've written this down because I didn't want to get it twisted, but I wrote this down just so that I could kind of just explain it as well as I wanted to explain it. So let me read from my notes. Okay. So the Chiku span compares the relation to Kumo. Yeah, okay. So the relationship to the Chiku span and the Kumo. Okay, that's what we're talking about now. This is how you look at it. So Chiku span offers trend support when price and Chiku span are on the same side of Kumo. Okay. In other words, if this is above the cloud and price is above the cloud, it's going to give you an additional confirmation that you're in a bullish phase. Okay. When Chiku span is inside the Kumo, in other words, like in a few days, we're probably, or as this plots out, when the Chiku span is in the Kumo, it's going to represent more of an equilibrium. That's going to signify less trend. In other words, the price is at about the same price as it was like 26 days ago. It's going to show an equilibrium in trend. So as long as the Chiku span is above the Kumo and price is above the Kumo, that's a bearish bias. What is the word I'm looking at? Confirmation. Okay. If you're at the same place, if you're in the Kumo, it's going to represent more of a neutral status. If you've got your Chiku span down below the cloud and your price is down below the cloud, then it's going to represent bearishness, and that's going to support a bearish narrative. Okay. In terms of the Chiku span and its relationship to price, I've also got this written down because I didn't want to get twisted as I said it. But that if you compare the current price to past prices, if it's about the same price as it was 26 days ago, then there is less price movement. There's less volatility. Okay. If you're talking about stuff where the Chiku or the the Chiku span is rising relative to price, it's indicative of a stronger trend. Okay, so it just is a way to look at it. If we're if our Chiku span is giving us kind of a nice solid uptrend, the Kumo is starting to go up, the price is starting to go up, everything is indicative of that price continuing to rise. So if I'm looking at it here, back when Facebook really started to rise, or Meta stock started to rise, if I'm looking at Ichimoku here, right here we had the cross above. Okay. Things are kind of flat. If I'm looking at the Chiku span, it's kind of relatively pulled back a little bit. Everything's in the cloud, but we're starting to break out. As things start to continue to get more bullish and bullish and bullish, more things are going to start to line up. We're going to have our twist. The price is going to start to kind of go up. The cloud is going to start to go up, and the Chiku span is going to go up. All in all, it's a confirmation in terms of what you're actually looking at. So, and there is quite a bit to pay attention to. None of what, and that's kind of why I kind of put everything in a PowerPoint. I wanted to kind of go through this very specifically. Nothing that I'm talking about is anything that's very complex. It's all pretty straightforward, but there's a lot of things to pay attention to. So far, we've talked about Tenkan and the Kijun, their relationship to each other. We've talked about the relationship of price and Kumo. We've talked about the current Kumo direction, the future Kumo direction, the Chiku span and its relationship to price and Kumo. And then we've also talked about the Kumo twist. There's a lot of things that you can look at where the Ichimoku can confirm itself, and it can kind of give you signals and all that kind of stuff. And hopefully you've learned a little bit about the Ichimoku here. But one of the things that I want to talk about next is like an add-on that we've put together for Metastock that can help you learn about Ichimoku and how it works and all that kind of stuff. Silvery Stars wants to know, is there a cross of the, he says the MAs, but cross of the Tenku-san and the Senku-san. I believe is what he meant, the two indicators. I did not include that in the scan, but it is included as part of the add-on. So let me go ahead. Richard says, based on that scan, I shouldn't be short HPE. I don't know. Yeah, we're not going to say you should be or shouldn't be short on HPE just because, well, I didn't read the legal disclaimer, but yeah, based on kind of what you're looking at with HPE, if I was like, actually, let's switch to HPE, Richard, and we'll actually I'll use it as I'll give my initial impressions of HPE based on Ichimoku, and then I'm actually going to show you the add-on that Robert Dedman made for Metastock that kind of keeps track of all this stuff for you. So let's go ahead and kind of take a look at HPE. Okay, I'm going to go ahead and select it. We'll just go ahead and switch over. And if I was kind of looking at it, the cloud's kind of flat. If I'm looking at the relationship, it might have closed up above the cloud. But let's see what the expert advisor has to say about it. So everything I'm going to show you, everything I've shown you to this point, I've tried to make sure that it's stuff you can do with the Ichimoku. As long as you have access to it, you should be able to do it. With the scan, it's a free scan. I wrote it for you, and I wanted to make something useful. So if you use Metastock, you should use that. What I'm going to show you from this point forward is an add-on. Okay, and so let's talk a little bit about what it is. This was written by Robert Dedman, a good friend of mine. It's called the Ichimoku Master, and it's awesome. Basically, everything that I've kind of talked to you about, it keeps track of all that stuff and helps you kind of understand what Ichimoku is doing on the chart. And I think he did a really good job. Robert Dedman owns TSA Group. He wrote our most popular add-on of all time called the Performance Systems Plus. It was so popular, we bought it from him and we include it in Metastock now. But it was our most popular add-on of all time. It's a great add-on. What I'm going to do now is I'm actually going to come to the HP chart, and I'm just going to show you what the add-on can help you do. So what I'm going to do here is I'm going to go to the Expert Advisor, and it'll bring us to a list. And the experts that he has in here are called the Ichimoku experts. So there's slight variations, but the variations have to do with how much commentary is provided in terms of explanations. And what he wanted to do is kind of like give you something. The complete gives you all the commentary. The description free kind of gives you an abbreviated version of the commentary. And the minimal gives you none of the commentary that I'm going to show you. So I would recommend, as you're getting used to, because I think this is something that can really help you understand Ichimoku, that if you get this add-on, start using it with the complete. So I'm going to go ahead and attach that to the chart. I'm going to go ahead and show you that. And you'll notice immediately when I do that, it starts to show you whether you're above the Kumo in price. So right here, you're bullish because you're above the Kumo or below the Kumo. One of the things I'm also going to do is I'm going to turn on those particular buy setups. So if I come in here, they're off by default. But if you go to Expert Advisor and Properties, I'm just going to come over to the highlights and the symbols. I'm going to turn on the TK crosses, which is the cross between the Tenkan and the Kijun, and then the close above the Kumo. So those are the two main signals that we talked about as being buy opportunities. I'm just going to turn on the symbols here so we can see them on the chart. And then here you can see, actually, Richard, today it's closing, or at least so far, it might sell off, but right now it's actually giving us a buy signal because it's closing above the cloud. So it's actually, that's probably why it came up in the thing. HP closed above the cloud. That's why it came up on the scan. That doesn't mean we should be totally bullish, Because if we want to pay attention to the other things, these things, the relationship of the Tiku-san and the Keiju-san and the price-Kumo relationship, these are all conditions that we want to be aware of. So now that I've attached the expert advisor, what I'm going to do is I'm going to go to the commentary for it and just show you how he's broken this down, because I think he's done a beautiful job of this. When he created this thing, I had zero knowledge of how Ichimoku worked. But then I kind of went through it, went through some of the classes that he taught, and he did a really good job of putting it together. And I think I've seen people charge like thousands and thousands of dollars for classes that help you understand just Ichimoku or the significance of the crosses. And this is something that I think is helpful because it helps you understand what's going on with Ichimoku. But in addition to that, you can also use it for scanning, which I'm going to talk about in just a second. So if I'm looking at HPE right now, earnings yesterday, interesting to see HPE from that perspective. So if I'm looking at Ichimoku with HPE and I kind of want to get a feel for how things are doing, he's going to score it for me. Ichimoku has a lot of ways to kind of look at a glance and see how things are kind of putting together. So if I'm looking at the TK cross, that's the cross between the Tinku-san and the Kenja-san, it's bearish, but it was also a weak TK cross signal. Okay, so we recently had a TK cross right here. It was a bearish cross. He rated it as weak. Okay, and it also occurred 7 days ago. Okay, right here is when that cross happened, or was it here? Yeah. Okay. The relationship from price to Kumo is price above the cloud or below the cloud. Right now it's above the cloud, but it's been neutral, right? But it just closed above the cloud, so it's going to give it a bullish score there. Okay. The price to Kumo direction is bullish, okay? In other words, this Kumo starting to head out, okay? The future Kumo direction, though, if we look at this going into the future from here, it's actually more sideways or bearish with that Kumo twist, so it's going to give us a bearish score there, okay? Your Chiku span relationship to the Kumo right here, the Chiku span is the closing price 26 days ago. The Kumo is here. That's actually bullish, okay? And the Chiku span relationship to price is neutral, okay? In other words, Chiku span is exactly where it was 26 days ago. So that's giving us a neutral reading. Actually, well, of course it'd be exactly where it is because it's 26. But where it was 26 days ago is where price was. It's at about the same place, okay? So periods that tell the next Kumo twist, there's a bearish twist coming up. You can see that right here. And so that's actually bearish too. So he actually kind of keeps track of all those things for you. If I don't know anything, if I want just a refresher, I can go ahead and you'll get used to this as you go, but you can kind of go in and say, okay, well, this is bearish, this is bullish, this is bearish, this is bullish. And it kind of scores it all down for you, okay? You can use Kijun as support and resistance. That value would be 17, okay? Senku span A and B are used as support and resistance, and those are the values, okay? And it will either say support if price is above it, or resistance if it's below it, okay? Then he goes to break down all the patterns for you. And I'm not going to read these all to you, but I do want to kind of tell you, these are the differences between the different expert advisors. And let me go ahead and kind of zoom in a little bit in case you want to read more than I'm going to. Right here for the TK signal, this black period is going to kind of give you an idea of what's happening. Okay, or an overview of what this looks at, okay? So in this case, the TK signal is a Tenkan Kijun cross. It's a predominant signal of the Ichimoku trading system, similar to a moving average, but instead uses midpoints. It compares general short-term movements to intermediate short-term movements. The Kijun acts as a short-term support or resistance. The longer the amount of time since a signal occurred, the more consistent the trend is. So kind of giving you an idea, a very good idea of how this works. The blue part is what it's actually seeing on the chart. So then it goes on to say the latest Tenkan Kijun cross signal to occur was a weak signal that occurred 7 periods ago. This supports a bearish direction. Weak signals usually occur at the beginning of the trend, but due to how early in the trend they continue, they may be also a retracement before the continuation of previous trend. If this is a retracement, the signal will be short-lived and the price will continue as a bullish direction. Okay, so it really breaks them down. I'm going to stop reading them all, But here it talks about the close above, in, below the Kumo. If it closes above the Kumo, it's bullish. If it's in, it's neutral. If it's below, it's bearish. And that's what it's going to tell you. And then it's going to say, okay, well, right now we're above the thing, unless we come back into the cloud, but that would lean to a bullish Kumo. And then it talks about the most current direction on the Kumo, what that is, the Chiku span and its relationship to Kumo, the Chiku span and its relation to price. And it's doing all of the analysis. It's telling you what it's looking at, and then it tells you what it sees on the chart in blue. And I really like the way that that actually does. Now, with Ichimoku, let's see, I have it in my notes. Goichi Hasada? Yes, Goichi Hasada really didn't have specific exit points. So over the years, people use like the cloud as an exit, either the top line or the bottom line. You might also, if you wanted a tight stop, you could use the Kijun. So if we're looking at this, and it kind of like got a little bit weird when I did it, if we're in a position, it gives us 3 stop values: a tight one based on the Kijun, a medium stop based on the Senku span A, and a loose stop based on the Senku span B. Okay. Now these might change if we're in a red cloud. The Senku span B is going to be below the Senku span A, but that's what it's kind of giving us. Those are kind of some different proposed exit points. So if we bought based on this kind of crossover here, where we had it cross outside of the cloud, there's a couple places we could look to exit. And just in general, we could look for a close below the Tenkan, which would have got you out here. Okay, you could look at a close below the Senku span A, which would have gotten you out here, or below the Senku span B, which it hasn't closed below the cloud, so that you'd still be in based on that condition. If we're looking to go long now based on this signal, and based on our scoring, I'm not sure I would be. We've got a lot of bullish. We only have 3 bullish. We've got 3 bearish, and we have 1 neutral. So it's giving me a very bearish, a very neutral reading. I'd probably wait if I was looking to buy now. But if I decided I wanted to buy now, I'd be looking to either have a stop at the Kijun or the Senku span A or the Senku span B. Okay, depending on how tight of a stop you wanted. Okay. All right. So that's like, it's a lot, and hopefully like this class is helpful for you to understand. I tried to make it as straightforward as possible, and I do think it's straightforward, but there's a lot in there, and that's why I like this, because it helps you learn about it. But it's also useful because it can help you find the patterns. Okay, and so the exploration that's included in Ichimoku, in this Ichimoku Master add-on, I'm going to come into that a little bit. It's called the Ichimoku signal. Okay, if I hover over it, it's going to kind of give me some advice in terms of how that works, but if it's going to give me some numbers. Okay, so a number 2 would be a long entry signal, a main entry. A 1 would be a re-entry signal. A -1 would be a re-enter for a short, and a -2 would be a re-enter for a long. I'm just going to go ahead and run this. We'll kind of talk about kind of how it scores everything up and that kind of stuff for you. But I'm going to run it against the same list. I've got the Dow constituents, the NASDAQ constituents, and the S&P 500. So let's go ahead and start this as a scan. We'll let it run. I'll grab a little bit of coffee. All right, and we'll look for questions. No questions? If you have questions, feel free to ask. I love this.
Hey, Jeff, while you're waiting.
Yeah.
I'm sorry, while you're waiting. Yeah, our wizard in the tech department here in Metastock has worked out the link that you shared earlier, and it is now working, so they can now download that free Ichimoku scan that you've provided so graciously.
Okay. I will post that in the chat again then.
I did already, and it's in chat, and good to go.
Oh, you did already? Okay. So yeah, now you can go grab it. I think something happened. I was like, hurry, get it live. I'm going live. So probably something happened, and they something got messed up. But apparently it's working now. So go grab it, Jeff. Also, nice name. This took a little bit longer than I thought it would, but it's going through 526 stocks. It's actually kind of giving us a reading of whether or not they have either an entry signal or a re-entry signal. Okay. The entry signal is its initial close above the Kumo. So HPE might come up on that scan. The secondary would be also a Tenkan cross, which would give you a re-entry opportunity. So those are what those means. Now, in terms of the signals, 2 means that you're a long initial mean entry. HPE is giving us that too. So 1 would be a re-entry signal. There's only one. ExxonMobil had a re-entry. -1 would be an initial re-entry short. -2 would be an initial entry short. Okay. If we come up here and we wanted to kind of get an idea of how all those conditions are looking from a chart, is scored for us. So we had gone through kind of those conditions. We said, this is bearish, this is bullish, this is bearish. Robert actually does that on a scan level. So right here, you can see TK cross. We had a weak one, so I gave it a -1 point. It a cross above the Kumo, which gave it a +1 point. Your current Kumo direction is bullish, so it gives it a 1 point. Your future Kumo direction is sorry, bullish, so it gives it 1 point. I'm laughing at my pronunciation. Your relationship between the Chiku span, that's right, and the Kumo is positive, so 1. Chiku span and price is -1. So that total score, if we're looking at this, if we're looking at all of the collated version of all of these signals, our total score would be 2. The score, because of the way that it's constructed, it goes from a +6 to a -6. The closer you can get to 6, the more bullish. The closer you get to -6, the least bearish. Now, we've done more advanced classes with Robert in the past, the creator of this exploration and this add-on. And he said basically, like, his rule of thumb was he likes to look for about a 4, because he felt like if you got all the way to 6, you're waiting too long. But if you didn't wait till at least 4, in general, you're not waiting for enough confirmation. So if I wanted to kind of look at some recommendations, or if I wanted to score this based on the score, if I'm looking for anything that has a 4 or higher, I could look at ExxonMobil, I could look at Zotis, I could look at Train, Caterpillar, Berkshire Hathaway, Baker Hughes. Let's go ahead and look at Caterpillar. And if I go ahead and open this up, okay, it'll open without the Ichimoku. I'm going to go ahead and add the Ichimoku to it. But if I just kind of wanted to see kind of how that looks, it should be looking somewhat bullish. And I can also, so I'll go ahead and click OK here. I'm going to attach that expert advisor. We got a bullish Kumo. It's a little bit flat on the thing. We can kind of look at it. But I can also attach that expert advisor. I'm going to go with the complete one again. And it's going to give me exactly that score breakdown. So in terms of this relationship, actually everything is bullish right now. Actually, I'm not looking at today. At some point in the past, everything, I was like, why? We just scanned it and it wasn't bullish, all bullish. But you want to make sure that this is pointing at the day you're looking at. But if I'm looking at the current day, yeah, everything's bullish right now. So this should have given us a score of 6. Did we have a score of 6 on there? Or something changed since we ran the scan. But right now we've got a perfect score of 6. If we wanted to kind of break that out, the TK cross is bullish. The relationship between the price and the Kumo, the price and the cloud is bullish. The current Kumo direction is bullish. Into the future is bullish. The Chiku span and its relationship to Kumo, all of this is broken down for you. So I think this is incredible in terms of helping you understand this indicator. None of the indicator is complex, but there's a lot of stuff to keep track of. This keeps track of it for you. It breaks it down. It tells you why it's kind of scoring, what it's scoring. And it is also helpful because after you learn about how to use Ichimoku, if you want to use it, you can find all the signals, but also have them scored. So we knew to look at Exxon because it had a score of 6. And here is kind of how everything breaks down for it. Okay. This is a re-entry. So this means we had a TK cross while we're above the cloud. Your initial entry will be when it crosses above the cloud. And then you'll have re-entries. It'll be as long as you're above that cloud and the TK crosses, those are the re-entries. Okay. It breaks it all down for you, though. It does a really good job. Helps you scan for it. I've literally, in terms of, I've seen people that charge thousands and thousands of dollars to do an Ichimoku class. And this is such a cool add-on in terms of the way that just breaks everything down for you. Makes it useful. keeps everything kind of highlighted for you. And I love the way that he scored everything and put it together in the scan. So as part of it, you're going to get 3 expert advisors. You'll get all the indicators. I just use the built-in indicator. You'll get the exploration. It does include system tests. So if you want to take the long entries and you want to exit with the cloud, there's a bunch of different ways that you can test this. You can test it with his loose stops, the medium stops, the tight stops. It does include system tests, and Robert is a good system tester. As part of it, you're also going to get an advanced training class. The cost on this is only $399. It's a one-time cost. We do back it with a money-back guarantee. Here at the event, we're going to only do $299, which is cheap. I mean, just to learn how to do the crosses and stuff like that, if you're paying somebody to teach you that, well, you just learned how, hopefully free. But I do think it does a really good job of helping you understand Ichimoku, but also find the stocks and the crosses and that kind of stuff. We sat down with Robert when he initially kind of created this, and we did an advanced training where he talked about kind of like what he looks at when he trades and how he uses it when he trades. That's available for you instantly. He talks very specifically, he had a specific template that he uses that measures cloud distances and stuff like that. That's also now included as part of the platform. So if you watch the training video, it's going to be like, hey, you want to go download this here? You don't need to. It's part of the platform now. So, but it's $299, 30-day money-back guarantee. You can order it by giving us a call, 800-882-3040. You can go to metastock.com/sales-chat if you have questions, or place an order there too. Or you can go to metastock.com/TSA-ICHI. So, ICHI. So, I hope that this class was helpful for you. This is such a cool product for what it does. It's only $300 and you own it forever. 800-882-3040, metastock.com/sales-chat, metastock.com/Tasaichi, I guess. Anyway, I hope that was helpful for you. I hope you learned something today. I really set out with the goal to teach you something, so hopefully that was successful. If you're interested in kind of really using this in your trading, this is a great, cheap, inexpensive product that you can add that'll do that for you. If you learned something from the video and you're watching the YouTube, hit the like. It helps a great deal. If I missed something important, make sure to mention it down in the comments. I read those. I will probably do this class more often as I get more comfortable with it. Anyway, hope you enjoyed it. Thanks for coming today. Try it out if you want to. I'd recommend it. It's so inexpensive for what it does. As opposed to that, thank you for coming. Stay healthy. Stay well. We'll see you at the next one. Thanks, guys.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.